This is the home price index in gold, okay? And here you can see that home prices were the highest right about 2006. Now that's a seminal year, obviously, right? That was the year that the market peaked, and I predicted that. I predicted that the market would peak at the end of 2005, and it did. But nobody really noticed it until the spring of 2006. Welcome to all of our listeners from 189 countries worldwide. Yes, almost every country. It's great to have you. And speaking of international viewers and listeners, remember to reach out to us if you are interested in buying American real estate, which I'm sure you are, and that's why you're here. We have financing programs for foreign nationals that have really never been available in recent history. New programs, exciting programs. So if you are a foreign national listening and interested in good old American real estate, the Brinks truck of the world, the most secure real estate in the world and the best performing, reach out to us through jasonhartman.com because we can definitely help you. Okay, today we have a lot of good stuff to cover, and I want to start off with a quote. Yes, you've heard it before. It's not a new one. It's a really old quote, but I just want to remind you of it. Invest in places that make sense so you can afford to live in places that don't make sense. Invest in places that make sense so you can afford to live in places that don't make any sense, right? And that just means good, solid, linear, and hybrid markets. Those are the sensible real estate markets, not the crazy cyclical markets. And we're certainly seeing that come true now, aren't we? Yes, we are, because prices in these cyclical markets are really on a roller coaster ride always, but they are getting pretty hard hit right now. And I think that is going to become a lot worse. Now, a lot of people are wondering where the market is going. You know, we have higher interest rates. We have a market that is transitioning just a little bit, but again, not very significant yet. We're going to keep watching those inventory numbers. I think inventory is one of the most important things to watch. And just remember that if you're watching the inventory statistics, you're hearing me talk about them, be sure that those are consistent sources. Different sources calculate housing inventory differently. So it's important that you use the same source when you're comparing, because of course, life's most important question is compared to what? And that's what you want to do. You want to make sure you are comparing to a consistent benchmark. It's okay to look at the other sources, but when you're doing the comparison, make sure you're comparing apples to apples. And I also want to caution you to be sure that you are watching what people do rather than listening to what they say. And here's what I mean by that. Of course, listening to what people say is important, but it's more important to watch what they're doing. Yes. Okay. So let's take the detractors, the people who are running around with a Chicken Little saying the sky is falling. Look, those people who have been saying that for years, well, not even years, decades, you know, the people like our friend Peter Schiff, who's been on the show. Listen, Peter's a super bright guy. I like listening to him. But, you know, when you've called you've called 40 of the last 2 recessions. That's what people say about him. Peter has called he's called 40 of the last 2 recessions, right? Meaning that he's always talking about the end of the world. There's always a bubble. And, you know, eventually if you keep saying that, yes, you're going to be right. Of course, there's going to be a transition time, a crash, a recession. Of course that's going to happen. It always happens. It's called the business cycle. It's nothing new. It's been going on since time immemorial. But the problem is, look at all the money People who listen to that advice have lost all the opportunities they have missed. I mean, you can't hear the dogs that don't bark, as I always say. And people rarely tabulate the money they lost by not doing something. They rarely consider that in any real and any subjective empirical way. So when you look at the housing market, I'm not asking you to believe anything I tell you. I'm asking you to simply look at the information I give you and look at what people in the marketplace are actually doing. What are they doing? That is the most important thing. The most important test ever is when people vote with their money. That is the ultimate test. It's like appraisals, okay? You know, a home appraisal is valuable. It's someone's opinion of the value. They have different, relatively scientific ways. Trust the science, they say. You know, that's what the left always says, except when they don't want to believe something, right? But, you know, they have relatively scientific ways of evaluating real estate prices, right? And that's great. But the ultimate appraisal is putting a property up for sale and letting an actual buyer vote with their money. That's the best appraisal you can ever get, is a ready, willing, and able buyer offering you money and signing a contract. No appraisal ever beats that, right? And many times those appraisals, those real world appraisals, are a much different number than what the appraiser will give you, either higher or lower. Comes both ways. But watch what people do. Watch what companies do. Watch how the market is voting with money rather than listening to the Chicken Littles talking about how the sky is falling. Or, on the other hand, the internal optimist that is always saying everything's a boom. Either side can be very, very wrong. Just watch what the market is doing. And that tells you much more than what anybody can say to you. So let's look at what the market is doing. Okay, this is interesting. This is a chart of declining purchasing power. Now, look, we all know that the US dollar has been inflated into oblivion, okay? Since the creation of the Federal Reserve back in 1913, over 100 years of dollars just losing value, right? The dollar from the time the Federal Reserve was established to now is worth just over 3 cents. Not a very good track record, right? But here's the thing. When it comes to real estate, it's fair to ask if the real estate is appreciating, because, hey, real estate always appreciates. If you wait long enough, it always goes up, right? It always does. And I know there are times when it doesn't go up. I get it completely. It goes down, but then it goes up again, right? And overall, if you buy the properties right and you follow my methodology of sustainable investing, then you are going to win the game. But in order to enjoy the benefits of sustainable investing, you have to buy the right properties and structure them the right way. They've got to make sense the day you buy them. Okay, great. So did the property go up in value or did the dollar go down in value? And when I talk to you about the Hartman Comparison Index, that's really what we're doing. We're looking at not just one thing. Why would anybody be silly enough to compare the price of real estate to just this one item that is obviously being debased through inflation, through terrible fiscal and monetary policy over 100-year track record of just decline. Now, as I speak, the dollar has really shown surprising strength, even in the face of all the money printing, of all the money creation. But why? Why, if you look at the dollar index, would it surprise you? Well, we have to ask ourselves life's most important question. Compared to what? See, that index is comparing to other currencies that aren't the world's reserve currency and certainly do not have the military to become the world's reserve currency, much less maintain the world's reserve currency status. Only one country in the history of humanity has ever achieved that, and it is the United States. And for all those who say, hey, the dollar is going to lose its reserve currency status, I say, don't hold your breath, okay? Don't hold your breath on that one because you're just going to be wrong. And we've heard that from folks mentioned earlier for at least 20 years. And I wasn't following him in the 90s or the 80s, but probably 40 years. We've heard the same thing over and over. Yet it hasn't come true. When I interviewed Howard Ruff on my show, I know that he was saying all this stuff in the 70s and the 80s and the 90s and on into the 2000s. Okay. He was on my show around maybe 2012, circa 2012. Okay. You know, that same drumbeat, that same message from really intelligent people, from bright people that have well-reasoned opinions can just be wrong over and over and over again and cause people who follow them to have giant blind spots and quite literally destroy their life because they are listening to bad advice. So let's take a look here. Now, this isn't part of the Hartman Comparison Index, but the HCI says the same thing that I'm about to show you on some priced in gold charts. Now, you know I am no big fan of the Case-Shiller Index, but the Case-Shiller Index is so widely used that this website uses it, and they created this chart, which is very telling. Okay, now why am I not a fan of the Case-Shiller Index? Well, the main index, the one that is most widely cited, at least that I can see is most widely cited, only profiles 20 markets, 20 big metro areas in the US. And of course, about 75% of those markets are cyclical markets. Bad idea. Not good. So we don't like this index. But fine, it is a widely used index and a lot of people are using it to evaluate the housing market. Great. There are some good things about it, but again, a lot of stuff I don't really like. I prefer other indices to this one. But whatever, here it is, right? This is the Case-Shiller U.S. National Home Price Index in U.S. dollars and gold. U.S. dollars and gold. And it shows you that housing is really quite cheap, priced in gold. Well, that's what I also show you in the Hartman Comparison Index. The HCI shows that, okay? Here's another way to look at it. This is the home price index in gold, okay? And here you can see that home prices were the highest right about 2006. Now, that's a seminal year, obviously, right? That was the year that the market peaked, and I predicted that. I predicted that the market would peak at the end of 2005, and it did. But nobody really noticed it until the spring of 2006. Why? Because they just wrote it off to, hey, it's seasonal, you know, the holidays, home buying transactions, they just slowed down around the holidays, around, you know, Christmas time, et cetera, right? So that's what everybody thought. But then when the spring selling season sort of never really arrived in spring of 2006, they thought, oh, wow, okay, we're in trouble, right? But you see, we went into a Great Recession and home prices in gold. Now, I'm not a gold bug, as you know. We're going to have Lynette on the show again, and she's a gold bug. And I think gold, you know, it's fine. It's insurance, but I don't think it's a real investment. Okay, it's simply an insurance policy. And you should probably own some. Look, I own some. I own a lot of things. Okay, I own cryptocurrency. Well, really just Bitcoin mostly. I have a little other stuff too. Gold, silver, platinum, palladium. Boy, The one I never thought would be this crazy great, and actually that's been a really good investment. But remember my definition of an investment. If it doesn't produce income, it's not an investment. It's only a speculation if it does not produce income. Precious metals, cryptocurrencies, they don't produce income. Non-dividend paying stocks, no income. Okay. Got to have income to qualify as an investment according to yours truly. But my little speculation on palladium has done really, really well. I can't believe the increase in the value of those coins. That's been kind of amazing to me. But hey, catalytic converters, good luck, whatever. I'd rather be lucky than good. But the bottom line is real estate priced in gold is very cheap, and gold has been considered money for thousands of years. It was a little cheaper right around 2012, but right now it's one of the cheapest times in history priced in gold. So we ask the question, life's most important question, the question all of you dubbed the Jason Hartman question. Clearly, I did not invent the question. That question is compared to what? So we use the Hartman Comparison Index and we look at the gold price versus real estate. Now, this is not the Case-Shiller Index, by the way. This is just the median home price using the Census Bureau data, National Association of Realtors, Federal Reserve, Kitco. Kitco we use for the gold price, okay? And we see that if you look at the second quarter of 1972, why do I use that? Because remember, of course, in August of 1971, Nixon closed the gold window and he took us off the link of the dollar to gold. He made it non-convertible. So I wanted to let the gold price fluctuate with the free market a little bit. So I said, okay, look, it started to really fluctuate. It increased. It almost doubled by the second quarter of 1972. It went from $35 to $65. So I think that's a good place to start because the gold price had increased by almost double as it started to float freely and be priced by the market rather than the government. And it was $65 an ounce. And the median price home was just under $27,000. And at that time, it took 412 ounces of gold to buy the median price house. By 1980, the price of gold had skyrocketed. Remember, we had the 70s crazy economy, massive inflation, Jimmy Carter, disastrous president, although probably a good man, but not a good leader. And, Nixon, he had his price controls, and the 70s was a really weird decade it's a really interesting decade to study as an economist, okay? But then the median house price had basically tripled in dollars. But what happened? Did the dollar go up? Or did the house price, or did the dollar go down, or did the house price go up? Which one was it, right? It's hard to tell. And that's why you have to use other things for comparison. And of course, the index prices a whole bunch of things, right? You know that already. I've talked to you about that on past episodes. But I'm just using gold here because the charts I'm sharing with you are gold charts. So by the end of the decade, by 1980, gold was $6.53 an ounce, and it only took 97 ounces of gold to buy the median price house that everybody thought was expensive because it had tripled over the last 10 years. But if you stored your wealth in gold, it actually got a lot cheaper. By 1990, it was 228 ounces of gold, and the house went up again by another third. By 2000, the median house price was $147,000, and it took 520 ounces of gold. So it got very expensive in gold, and most people thought it was very expensive in dollars at that point too. So by the end of the first quarter of this year, it only took 184 ounces of gold to buy the median price house that everybody thought was super expensive at $357,000. So priced in gold, is it cheap or expensive? Real estate's actually quite cheap, historically priced in gold, and many other things, according to the Hartman Comparison Index, which I have shown you that. I've proven it over and over. But listen, don't believe the index. Don't believe me. Just look at what people are doing. They're still buying up houses like hotcakes. Yes, the higher interest rates have caused inventory to increase. That is a concern. But I'm going to show you something in a few minutes that's going to blow your mind. Get ready. It's coming. Just a few minutes and we'll be there. Composite US, here's the Case-Shiller again, okay? And US dollars versus gold showing that housing is cheap. Okay, let's look at another chart. Okay, this is grams of gold. Okay, so this is the monthly data from the US Census Bureau. It's a logarithmic chart, and it's median sales price of US homes in USD versus grams of gold. So here we're not using Case-Shiller. We're using a different index from the Census Bureau, and it still shows you that real estate is very cheap, priced in gold. Again, it varies over time, but very inexpensive. It's expensive in dollars, but cheap in gold. Okay, how about this one? Let's not look at gold. Now let's look at the price to income ratio, and it is increasing, meaning that housing is becoming more unaffordable. Definitely more unaffordable. But compared to what? Compared to recently, yes, it's a big jump over the last year because it was so affordable previously. Or, really 18 months ago, it was super, super affordable. Thank you, pandemic. But still, historically, it's pretty cheap on a price to income ratio. Now, when we look at the payment, which we're not going to do today, but I've already shown it to you, you know that it's actually super cheap. It's literally, if you look at the monthly payment and you go with Shadow Stats numbers, it's half of what it was 52 years ago. But don't believe my numbers. Don't believe the index. Don't believe these charts from pricedingold.com. Okay, don't believe any of this stuff. Just look at what people are doing. Just look at what people are doing. They're comparing the price of real estate, mostly based on a monthly payment, even with much higher interest rates. They're comparing it to the cost of everything else in their life. And they're saying, well, compared to rent, should I buy or rent? Compared to gold, oil, rice, other food commodities, does housing look cheap or expensive? And it looks cheap even now. And that's what the Hartman Comparison Index shows you. That's what it tells you. But who cares what it tells you? Just look at what people are doing as they walk into the marketplace and they vote with their money. They are constantly asking themselves, is it cheap or is it expensive? So what are they doing? Not what are they saying? What are they actually doing? And the facts are undisputable. Okay? They're inalienable. They show you what people are doing, and the market is still on a tear. Not as much as it was a year ago or 18 months ago. I'll give you that. But compared to a few years ago, the market is booming. Compared to all of these other times that the index evaluates with you, real estate is cheap. And that's why it keeps going up in price. So I shared with you this meme that I did a few weeks ago. Let's say there are 1,000 buyers who can afford a home with a 3% mortgage. Well, guess what? 3% mortgages aren't available anymore. Tough luck. There are 800 buyers who can afford a home at 4%, and just 600 who can afford a home at 5%. So, depends on whether they do adjustable rate mortgage or a 15-year mortgage. If they want a 30-year fix, they're going to pay over 5% now. But you get the point. These numbers aren't real numbers anyway. Okay, they're just an example. But the meme ends saying, none of this matters when there are only 100 homes for sale. But I crossed that out on my new meme. If you follow me on Instagram, Jason Hartman 1 on Instagram, you'll see this, and you may want to share this meme with some people, some of the people that just don't get it. If you follow me there, you'll see that I crossed out the 100 and we put 120 in handwriting with a marker, right? Because, yeah, inventory has increased a little bit. It hasn't increased by 20% overall, but it is going up. It's ticking up a bit, and we got to keep watching that number. But it's still way below the demand. It's dramatically below demand. There's not nearly enough inventory to satisfy the existing demand. Now, demand is also falling a little bit because these people can no longer qualify for that mortgage with the rates. They're almost double from their 5,000-year low, right? Which is a faulty comparison. That's not the comparison people should be making. But you can readily see that people are voting with their pocketbooks and they are buying, and there is still a dramatic lack of housing inventory. This will not last forever. The market will change. There will be a transition. And all you need to do is watch the Hartman Comparison Index to know when that is happening in any significant way. Right now, we're updating quarterly, but we're trying to get a group on. We just presented to a whole bunch of college master's students yesterday who are interested in taking on the project of building our data warehouse so we can update the index monthly, maybe even more often than monthly. But right now it's quarterly, and it still says real estate is historically cheap. Housing is historically cheap. And watch the inventory numbers, and I will keep sharing them with you. They are ticking up a bit, but again, still far below the necessary amount of housing inventory. And don't forget one other very, very important thing. You must segment that inventory based on prices. And we are not doing that. We did not do that today. It's pretty hard to do. But in the entry-level segment of the market, all of these inventory numbers become much, much more extreme to where there is just like no inventory, basically, right? There's almost nothing. When you look in our markets, when you reach out and work with our investment counselors through jasonhartman.com, and you look at Florida and Alabama and Tennessee and the other markets that we have around the country, you can just see there's just this incredible shortage of this really desirable entry-level housing that makes for really good rental properties. And when our clients are buying them, they're just going up in value so quickly. But I'll actually correct myself there. Are they going up in value? Maybe not. Maybe not. Maybe the dollar is just declining in value so quickly that they're just being consistent. And the real estate, the house, the rental property, the income property is really offering just an insurance policy for you based on price. It's just hedging the dollar. But because it's this beautiful multidimensional asset class and you earn returns in all of these different ways, the price hedges the dollar. But the income, the tax benefits, the leverage, the inflation-induced debt destruction, especially now, that just makes for this beautiful, beautiful equation that will make you nothing but money. All right. Thanks for joining me today. Reach out to us from jasonhartman.com. Don't forget the Amazon gift card contest, or not contest. It's not a contest, Jason. Don't call it a contest. It's a giveaway. It's a raffle. $50 gift card. We give away 2 of these every single week. If you were a prior winner by writing a review on Apple Podcasts or a comment on any of our YouTube videos, we pick these every week. We have 2 winners. Go to jasonhartman.com/ask and claim your prize. Remember, one of the people I announced on Monday's show went to jasonhartman.com/ask and he says, "Did I win something?" Yes, you did. So congratulations. All right. Over and out for today. We'll see you on Friday for our next episode, Flashback Friday. And keep watching the YouTube channel for a lot more, and keep listening to the podcast. Make sure you are subscribed to both of those so you can get all the updates we discussed on today's episode. And thank you for listening, and happy investing. Remember, invest in places that make sense so you can afford to live in places that don't make sense.